Hello traders, it's Sunday evening, June 4th, and it's time for our Sunday night video. I'm really going to try and stay on the schedule. A lot of you are posting comments. You like the Sunday night video because it helps you recap what happened in the previous week and it helps set the tone for the upcoming week. Didn't have a chance to do my video on Wednesday last week because it was a holiday shortened week that just got away from me. So I did do a recording Friday morning about an hour after the open. I highlighted 4 stocks that I thought would do really well during the course of the day. So we're going to take a look at those. I also mentioned we're about an hour into trading on Friday. I said, listen, this has the makings of a really good day. So we're going to take a look at the market in just a second. All of my videos start off with a recap of the previous trades that were highlighted. Then we do our market analysis. Then we find new trades. So I'm going to be doing that. We have 4 trades that we can lean on from Friday. So I'm only going to look for one additional bullish pick today. But let's go through and take a look at some of the stocks that were highlighted. AZUL. That was a long that I highlighted on Friday. Let's zoom out, take a look at what we've got going on technically there. I love this breakout. And you can see we've got a couple of different breakouts. This was an older trend line that was breached to the upside. I like that. I like this high plus that was breached and that one. So we've got a number of things working for the stock in addition to getting through these major moving averages. And you can see earnings before the open, stock holds that 200-day moving average and starts to climb. Excellent relative strength, decent volume as well. I think AZUL is going to be a stock that you want to trade on the long side. You want to wait for it to have relative strength. So we wait for those dips to occur. And then when we have that relative strength, like here, and we're looking for it to be below zero, it regains its relative strength. You've got a little bit of a move right here. We're going to take a look at the market. We had a decent move higher throughout the course of the day on Friday, but the action really started to compress in the last 4 hours. So there really wasn't a lot going on in the afternoon, but the market held its gains and it had a pretty major breakout on a D1 basis. IOT was another long that I highlighted. I really like this stock. We'll go into the daily chart, take a look at what's going on there. Here we have another high plus breakout, a horizontal breakout to a new relative high, post earnings, fabulous volume. That big volume tells us that institutions are in there buying. And let's take a look at the stock on a 5-minute basis. This was a big gap up, and you can see how the open to the high is right about here, which that support held, and the stock was able to finish near its high of the day. That's excellent. That tells you that profit takers are being held at bay. So you get this big move up, and anybody that was long here is anxious to take profit. So all of that selling, sell, 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 is being gobbled up by buyers, and that is a bullish sign when the stock is able to preserve most or all of its gains for the day. So I like what I see in IoT. I think it's going to be one that you continue to watch. You've got your relative weakness in there, relative strength here. It's a really nice little entry point for you. So let's take a look at another one. AMZN, I had mentioned Amazon. It's a fairly choppy stock. I do like the technical breakout. So this is a stock that you'll want to keep an eye on intraday. Go into that daily chart. There we've got a couple of high minus trend lines, longer term, that have been breached to the upside. Let's zoom out, take a quick look. These are significant trend line breaches. I think Amazon's going to continue to push higher. I like what I see in the overall market. I'm not gonzo bullish here. I'm more or less in the camp of neutral to slightly bullish. We've got some major news coming up, so we'll get into that in just a second. I like Amazon. I think selling some out of the money bullish put spreads right on this upward sloping trend line here, which would put you at about the $120 level, will work. And Amazon, unlike Google, Microsoft, Nvidia, on and on and on, has really not participated in the market rally like the other mega cap tech stocks have. Part of that is that retail has been relatively soft recently. And then the final stock that I like, which I highlighted, was TTD. Take a look at that. This has got a number of breakouts it was trying to make on Friday. I didn't care for the way that the stock pulled back and it never regained its relative strength. We'll go into the 5-minute chart. And you can see how this gap up, the first thing that we would like to always see on these gap ups is we want to see that opening price preserved. We don't want to start filling in a bunch of this gap because just as I had mentioned with the stock earlier, you've got some profit taking. Well, these profit takers are actually able to move the bid, which tells you that buyers are not as interested. And so once you take out that opening price, now we start filling in the gap. So TTD was a nice initial breakout. It looked good. The volume was good. I'd be a little bit careful on this one. You just want to make sure that it's able to preserve this breakout right here through the $68 price point. If it comes back and tests it and then regains its relative strength, then it's probably going to continue to float higher and test this 77.50 level right in here. So decent. Stock is a bit choppy. We can see that in the daily chart. So you need to be a dip buyer and you need to wait for it to regain that relative strength. The earnings reaction was good. So yes, this is one that I would watch, but I would probably put it on the lower tier of stocks to watch. I like IoT better. I like AZUL better. Amazon, I think, is going to continue to be choppy, but I think it's one that can work its way higher as long as the market has nice upward momentum. So let's take a look at what the market was doing. You can go back and watch my video. I started recording about in here, about an hour into the open, and I said, folks, this has the makings of a very bullish day. We're going to go into the daily chart, and I'll show you why. So yes, this was a nice entry point, especially when we take out that high right there. And you can see how we're floating higher, but the problem is that the volume really dried up late in the day and we started to compress. So there was not a whole lot going on in here. You can see blue line below zero, not a lot of market volume, mixed overlapping candles, tiny bodied candles. So the afternoon session on Friday was quite lackluster, not a lot going on. And we really need that market tailwind to fuel our day trading. So we didn't have too much of that on Friday. Let's go into the daily chart though and take a look at the S&P 500. Let's zoom out a little bit so we can see where those trend lines come into play. That is a nice trend line. That is a nice trend line. This is a nice trend line. All of them breached to the upside on decent volume. And that last component on decent volume is very, very important because it tells us that institutions are engaged. So earlier when we had this part of the rally, you can see how low the volume was. That tells us that this move could be easily reversed. We just simply can't trust it. We don't start shorting it. We watch for technical confirmation that there's going to be a breakdown. Well, it never came. And as time passed and as economic releases came out, the market actually started to gain some confidence that this was a pretty good entry point, and now all of a sudden we break through this horizontal resistance level. So from a technical standpoint, purely technical standpoint, I like this market breakout. I think this is a decent breakout. Now, on a fundamental basis, and this is something also that I preach in my coursework, there is never a reason for you to be blindsided by a scheduled news release. So we are always looking forward the next week, the next week and a half, the next 2 weeks. Where are any potential speed bumps that we might have to weather? So we're neutral to slightly bullish. Is there any news that could change that opinion? Well, yes, we've actually got light schedule this week. So the only thing that's coming out of any great importance this week is ISM Manufacturing is going to be coming out tomorrow. The rest of the week is very, very light news-wise. However, in a week and a half, we get the CPI on Tuesday. That is going to be very closely watched because it has been running super hot. And the Fed is still concerned about inflation. The last reading was at 4.9%. Their target range is 2%. So this is way above that target range. We're hearing more and more Fed officials say, hey, we're not really endorsing a pause here. We think we still need to raise interest rates. And it's very possible that we see at least a quarter point interest rate hike, especially if that CPI comes in hot. Everything that I've seen so far indicates that the inflation numbers are going to be much hotter than where the Fed would like to be. And the issue with all of this is that the market's still pricing in a rate cut in the last quarter of this year. Well, that's a huge disconnect, especially if the Fed is continuing to hike rates this late in the game. Plus, the Fed has already said, do not expect any rate cuts this year. And in listening to statements from Jamie Dimon, he said he feels that regional banks need to be expecting a 1% to 1.5% higher interest rate environment. And he's not sure that they're prepared for it. So he's feeling that there could be additional signs of strain in the regional banking sector. He's also said JP Morgan Chase, largest bank, is not going to be buying any more distressed assets or any more banks. Okay. So where there's smoke, there's fire oftentimes. And I remember in 2008 and 2009, I'm not saying that this is similar, but once you had a buyout of Countrywide Financial by Bank of America, everybody took a deep breath and thought, okay, well, there is no financial crisis. So that's kind of a juncture that we're at right now. We had a couple of bank failures, a couple of the largest bank failures ever, and the market's had about a month and a half, and hey, the second shoe hasn't dropped. Maybe everything is going to be okay. And so now they come in and they start buy, buying, and the market has this nice breakout. That's the same thing that happened in 2008. We did see a nice little rally in the middle of the year, and it wasn't until the fall that everything fell apart very, very quickly. So I'm just putting a word of caution out there to you. I still like keeping my trading a day, 2 days, 3 days, and inside of that window, because this is not a market where we're seeing liftoff, stacked green candles consecutively on heavy volume. We're not seeing that. We're still seeing some two-sided price action, and we can tell that from the daily chart. Look at how choppy all of this price movement is. Get a couple of nice up days. Whoop, there we go. Give those gains back. Get a nice little update here. Whoop, give it back. So it's been a gradual, oh gosh, maybe 4 steps forward, 1 step backwards. Not even that. It's been more like 1 step forward and 1 step backwards the whole way, but a tiny little edge to the upside with a nice little breakout. We've got valuations are still very high, 18 forward PE on S&P. We've got a 28 forward PE on the Nasdaq. So those are lofty numbers. Stocks are not a bargain here. We've got FOMC meeting coming up in 10 days. Plus we have the CPI reading. Plus the ECB has already said they are raising rates. And I believe they're meeting is Thursday, June 16th, if I recall correctly. So, yeah, those are slight headwinds that we need to be aware of. So, we need to be in kind of a hit and run, keep it very short term, focus on the long side mode. You got the 4 stocks that I've already highlighted Friday, and now we're going to try and find another stock that we like. I'm going to keep the video pretty short because I just did a couple of videos almost back to back. I'm going to go into one of my searches. It's called Relative Strength 30. I'm going to look at the stock right at the top, MDB. Really like this stock, and we like this stock right back here when it broke through this downward sloping trend line. I highlighted it in a video a few weeks ago. It's done very, very well. I don't suggest holding stocks over earnings announcements just because of the uncertainty. But once the earnings have been released and we get to evaluate the reaction, absolutely we can go in and buy these stocks. So Here's what the stock did after that earnings announcement right here. You can see this downward sloping trend line, breach to the upside, massive volume. We're getting through a number of downward sloping trend lines as well, and you can see how this trend line actually provided a little bit of resistance on Friday. So let's zoom in and see where all these trend lines come into play. These are our automated trend lines. They really help us plan our trading out, and they help us identify these nice big breakouts. So we want technical breakouts, and we want them on heavy volume, and we want to see these long green bars. Well, we can see the distance that the stock traveled on Friday. Well, a lot of the firepower is exhausted when it makes a big gap up like that. So this stock gapped up from, gosh, roughly around $300 to about $376. So it made a big move. It might need to consolidate for a few days, but this is going to be a stock that you want to watch once it goes through and digests these gains right here. I believe you're going to see buyers return, and then it will make its next leg higher. So you don't need to dive into this Monday morning. Pete said he liked MDB, so I'm going to buy some on the open. Don't do that. Wait to see what the market does. I don't even know what the futures are going to open like right now. They could open lower. We could see some of those gains vaporize. There's no reason to go out there and chase. Make sure that the market bid is strong. We've got this nice little breakout here. So wait to see if we get a little bit of a pullback. Wait to evaluate the relative strength in the stock. If you see the stock moving higher when the market is flat or the market is lower, that's an excellent sign, especially if it happens on heavy volume. Then you know institutions are still in there. They're anxious to buy the stock. They don't care what the market is doing. They see MDB as a longer term play that they want to be in on. So that's the type of price action that we're going to be looking for. It might simply take a couple of days for it to digest these gains. So be watching for it. And one tactic that you can use, there are actually a few of them, and you might want to employ this on, let's say, a 30-minute basis, maybe a 1 hour basis, and this would take advantage of our new alerts that we have. So here's the mentality that you would have. Okay, Pete told me the market's breaking out. It looks good. We're through this technical resistance level. I've got to find these 5-star stocks that really want to move higher. They've made nice technical breakouts after earnings. They've got heavy volume. We have all the ingredients. There's only one little problem with this MDB play, and that is that the stock has made a really big move post earnings. So there are a couple of different strategies that we can use. One would be to take a look at the stock on an M30 basis. And you can see how on a 30-minute basis, the stock has a little bit of relative weakness. When you make a move like this, that percentage gain is so big that there's no stock that could possibly maintain that momentum. So yes, it's going to have moments of weakness. Well, you wait for that weakness and then you wait for the rebound. Given that on an M30 basis, we're already below zero, let's go into a 1 hour basis and take a look at that. And you can see how on a 1 hour basis, the stock is still very, very relatively strong. So I'm going to right click and I'm going to go into my alerts, create an alert, and I'm going to select strong versus SPY. Then I'm going to select my time frame as an hour. So I want to see the stock strong versus the SPY on a 1 hour basis. Here's the problem. Gosh, the stock already has relative strength on a 1 hour basis. So what I need it to do is I need it to lose that relative strength, and then I need it to poke back above zero. Then I want to get my alert, because then I will know that the stock has pulled back a little bit more, digested more of these gains, and now it's ready to go back up. So it's a great way to time your entry points and to buy dips. So I'm going to add this, but I'm also going to mark this box here, which means that it's currently true. The statement is true. Stock is strong relative to the S&P 500, but I want it to go false and then true again. And when it does so, I want to get my alert. So that's one tactic that you can use. Now, there's another indicator that we like using, and that is LRSI. That's the little gear RSI. It has a smoothing component to it, and I find it to be much, much more effective than using RSI. RSI can be kind of a worthless indicator, but I'm not going to get into that. Just know that LRSI is much better. So we're going to go in, excuse me, and we're going to click on LRSI study, and we're going to add it, and we're going to use the normal default settings, which is 0.5. It's bearish when it's below 0.2, and then bullish when it crosses back above 0.2. And so that's what we'd be looking for in this particular instance. Now, LRSI is not as sensitive to price as OneOSI, which measures relative strength. So that means that we can use shorter term time frames if we're going to use LRSI with this stock. And so it's going to take a lot for the LRSI to go below 20 and then to poke its head above 20. And when it does poke its head above 20, we are going to want an alert. And that's going to tell us that some of this digestion that we've talked about has taken place. So the stock is pulled back, all the profit takers are out of the way, and now we're starting to see some legitimate buying, and we're starting to get the stock to move higher again. So for LRSI, I'm going to use a 30-minute time frame. And you can see LRSI on a 30-minute time basis is still above 80. Let me take the other indicator off because I don't want you to confuse the two. This is LRSI. I've done a complete video on how to trade LRSI. Let me give you the basics. So when the stock is below 20 and LRSI goes above 20, that's a buy signal. When the stock is above 80 and it dips below 80, that is a sell signal. And so we're going to go in and use LRSI on a 30-minute basis. And this would be one example. Okay, I want to buy the stock, I want to buy the stock, I want to be long the stock, but I want to try and time my entry. Well, here you've got LRSI above 80. It drops below 20, and now there it crosses back above 20. Well, that is going to be your entry point. And then once it gets above 80, it tends to be very, very sticky. So if you're interested in what LRSI does and how to trade it, please look for the video on my channel. I will add a link to that particular video in the description area so you'll be able to go in and take a look at the indicator. Very, very effective. What I'm using it for right now is I want to see that stock pull back. I want to see it digest some of these big gains. It's telling me based on Friday's price action that it's a little bit tired. So let's get that LRSI below 20. Let me know when it goes above 20 because that is when I'm going to want to take another look at it. I may trade it at that juncture. I may not. That's the beauty of using alerts. Doesn't require any position management. It doesn't require me to watch the stock at all because it's on autopilot. I've got my alerts set. I get the alert. Maybe I want to trade it. Maybe I don't want to trade it. And instead of constantly flipping through a bunch of charts and having to monitor them and babysit them all the time, these alerts are going to help us because when we see something super attractive, we set the alert, we wait for the conditions to be true. And you can even use multiple conditions. If you wanted to use, hey, let me know when it has relative strength on a 1 hour basis and when LRSI has been below 20 and now it's above 20, you can have two alerts working at the same time, and you will get that alert triggered when both conditions are true. So let's set this one. I'm going to have a couple different alerts on it, so I'll be able to know during the course of the week when conditions are set up for me. Create alert. I'm going to go into the drop down. I'm going to select LRSI and I'm going to select a time period of M30 and I want to have it greater than 80 and that will give me my buy signal. I'm going to add the statement here and it's right now true. So I want it to be false and then I want it to be true again and then I'll get my alert for it. I'm going to save that And so now I've got two alerts working on MDB. That is your long. That's a great way for you to stay apprised of what's happening in the underlying stock without having to babysit it. And now you would do the same thing for a few dozen stocks that you might have. Some might be day trading picks, some might be swing trading picks. Swing trading picks, you're going to use longer term variables. Day trading picks, you're going to focus mainly on M5, M15 time frames. And so instead of flipping charts, flipping charts, flipping charts, when you find those 5-star charts and those stocks that you really want to be in, we all want to enter as best we can. You want to buy those dips on those stocks. These alerts are going to help us tremendously. So instead of focusing on flipping charts constantly throughout the course of the day, you're going to be focused more on managing your alerts, checking them out, taking a look at the chart, watching that relative strength, looking for that heavy volume, and it's going to be a dramatic improvement in the way that we trade. So please take the 2-week trial. If you're interested in the alerts that we have, the automated trend lines, these are all new additions for us. And we're going to be adding a ton of variables that you'll be able to use to set these alerts on. You'll even be able to click on the column header for an entire search and set an alert based on all the stocks that are coming up in that search. So very, very powerful. Thanks so much for watching, everyone. I plan on doing a video Wednesday. We're going to review MDB. We'll also take a look at the other 4 stocks I highlighted on Friday. We'll see how they're doing. Market looks like it should continue to inch higher this week. There's not a lot of news to really stand in its way, but we do have to be particularly careful of the upcoming FOMC statement, especially if the CPI comes out really hot. Jobs numbers have been really good right now, so the Fed has some breathing room. They have some breathing room to hike here. So let's see what happens. Thanks so much for watching. Good luck with your trading this week. We'll see you Wednesday. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.